Senator Casey.
Mr. Chairman, thanks very much. Before I start my questions, I wanted to ask unanimous consent that a statement be entered into the record. It's from Matthew Shearer, entitled "The Promise and the Peril of AI in the Workplace." It's dated today. I'd ask consent to make that part of the record.
Without objection.
Thanks very much. As Congress considers artificial intelligence and the future of work, it's critical that we focus on workers' voices and ensure that workers have a seat at the table when policies are made and decisions are made being made that impact workplaces in such a significant way. As the power imbalance in workplaces continues to grow, employers are increasingly willing to use workplace technologies like AI, as well as invasive surveillance technologies that will allow them to track workers almost like pieces of equipment. Decisions are being made solely by employers without consultation or input from workers, and that's why I've introduced several bills aimed at creating a much-needed set of rules, standards, protections, and oversight to counter the risks of workplace technologies that are spreading unchecked. This July, I introduced the No Robot Bosses Act, it's Senate Bill 2419, which aims to regulate the potential risks and use of AI in the workplace. This bill would add protections for job applicants and employees related to automated decision systems and would require employers to disclose when and how these systems are being used. It would also create guardrails around how AI can manage workers. A second bill, by way of example, is the Stop Spying Bosses Act. This is Senate Bill 262 that I introduced in February to require disclosures and prohibitions for employers engaging in surveillance of workers. American workers are the backbone of our country, and they deserve to be treated with basic dignity at work. I'm hopeful that these bills and other actions that we take will help empower and protect workers, and I'll continue to fight for those protections and rights. Mr. Newman, I just have a question for you. Do you agree that the rise of AI has created both novel and unaddressed issues in the American workforce, and particularly with respect to both the autonomy of and the dignity of the American worker, and that it requires both study and appropriate rules of the road?
I agree with you 100%, Senator.
Thank you, and I hope we can work together on legislation and other policies that relate to workers. Mr. Chairman, that's all I have. I'll give back all my time.
This is happening, friends. Millions of Americans fear that Social Security monthly benefits will not be available for them when they retire. So in today's video, I'll be sharing with you what may happen in the worst-case scenario and how this could affect your monthly payments. My dear friends, please make sure that you watch until the end of this video for the latest news and information. Also, this coming Friday, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, all you have to do is click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, dearest friends, the greater your chances of winning these giveaways. When it comes to Social Security, many people have one question: will my benefits be there when I retire? Fears that the program could run out of money tempt some people to claim benefits as early as possible to get back the funds they have paid into the program for their retirement. Meanwhile, beneficiaries who are already receiving monthly checks may worry that their income will come to a stop. In a new interview released by the agency, Social Security Administration Chief Actuary Stephen Goss sought to reassure people with regard to those doubts. In the worst-case scenario, Social Security may reach a point within 10 years where the program may only be able to pay about 80% of scheduled benefits. Today, Social Security has two trust funds that have a total of $2.8 trillion in reserves and functions like a savings account for the program. The trust funds collect any extra money that comes into the program. When more money is needed to pay benefits beyond what is coming in through payroll taxes, the trust funds are available. But projections show the $2.8 trillion reserves will be used up around 2033 or the year 2034. Then at that point, the income coming into the program will be less than what's required to pay benefits under current law. Social Security's actuaries are responsible for estimating the future costs of benefits that must be paid and comparing that with the amount of revenue projected to come in. The SSA has scheduled a single payment of up to $914 for the month of November. Beneficiaries from different states will receive this specific amount in the form of financial aid, which is issued by the agency. It allocates part of its budget to assist those who meet certain requirements. This check corresponds to the direct payment section of the Supplemental Security Income Program, and the amount is expected to be issued on November 1st. The payment amounts for beneficiaries will depend on their status. The rate of payments for individuals is $914 each month. Essential persons, or those who reside with someone receiving SSI benefits and provide them with care that they need, will be entitled to a monthly payment rate of up to $458. For the first time in nearly 2 years, the Federal Reserve is set Wednesday to keep its key short-term interest rate unchanged for a second straight policy meeting. It is a clear sign to date that the Fed is edging closer to the end of its rate hiking campaign. The Fed is standing pat for now, in part because the U.S. economy has been moving mostly in the direction that Chair Jerome Powell has hoped for. Inflation has tumbled, even though hiring, consumer spending, and economic growth have remained robust. A widely predicted recession has not materialized, but the deceleration of inflation has slowed, and solid economic growth could keep inflation elevated or even send it higher. And as a result, Powell and other Fed officials are not yet willing to take a final rate hike off the table. Powell will likely highlight the progress the central bank has made while still underscoring that inflation remains too high and that future rate hikes may be needed to finish the job of slowing inflation to the Fed's 2% target rate. Since March 2022, the Fed has raised its key rate from near zero to roughly 5.4% in its effort to tame inflation. The cost of mortgages, auto loans, and credit card debt have all risen in response. Jerome Powell and other Fed officials are weighing two different trends as they consider their next moves. On the one hand, U.S. economic growth surged in the July to September quarter on the back of robust consumer spending, and hiring jumped in September, keeping the unemployment rate near a 5-decade low. Well, my awesome and most amazing friends, that is the end of my daily stimulus update video for today. My dear friends, thank you so much for being part of this community. To say thank you and to show my appreciation, every Friday I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter the weekly giveaway, friends, all you have to do is click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. Thank you and have a wonderful and very blessed week.